I bid you all good morning, good evening, and good night, wherever you may be watching this transmission. It is I, Mike Martins. We got 4 hours till the bell rings, till the stock markets close. And what is happening? Well, there's lots happening. Again, another huge, massive sell-off. The S&P and TSX down 992 points. That's sitting at 12,724. That's the Toronto Stock Exchange. The S&P 500 down 180 points. That is sitting at 2,530. The Dow Jones down 1,668, down 7.19%. Wow, sitting at 21,517. So we're looking at any gains after 4 years now might be completely wiped. Canadian US dollar sitting at 71 cents. We will see a 70-cent Canadian dollar as the US dollar strengthens. And crude to US, $29 a barrel. We are looking at a $29.79 a barrel, down $1.94 this morning, down 6.11%. Bitcoin is getting hammered huge. Holy smoke, $7,000. Gold is down at 1503, down 12.80 points, $12.80, down 0.84 percentage points. Sorry about that. Russell 2000 is getting another kick in the pants today, sitting at 1,094, down 115 points, decimal 48. 10-year bond is 0.83. Look for massive inversions in the well, we've been forecasting the last 2 years, the inversions in the bond yield inversions. That's been happening the last year and a half, 2-3 years. You notice that that pattern starts to take on effect when you know something's not going right in the markets, right? There's the NASDAQ. Look at the volatility. Holy, I've never seen VIX this high in a long time, man. I think the last time the volatility was this high, wow, I don't even remember when I saw it this high ever. The FTSE is down, closed last night, down 184 points, sitting at 5,182. The Nikkei down 429, closing last night at 17,000. And Japan is basically all the major gains it's done, or the major gains it's had, is pretty much all gone in Japan. I think the last 3 or 4 years of gains, or slow motion. But it's all federally owned anyway. It's their banking systems and stuff that are bailing in these markets anyway. I don't see a lot of people like back in the 20s and 30s losing their shirts like they did back in the day, where everybody lost because everybody was in the stock markets. Now the average Joe Donuts goes by his life day to day, doesn't really care too much what's happening too much in the markets. He should, if he's starting to see that work is starting to slow down and things are starting to slow down all around us. All right, Tim Hortons closes in-store seating, shifts focus to drive-through. So that's it. Like on my Friday night game night at my store, I just, because from 6 to 10, we do game nights. People come in, we play games, we roll dice, we're all sitting in groups and having fun, and I had to cancel that because I don't want to be the guy in town that's, they got it at that store and everybody was there, and and this way it's safer. It's, you know what I'm saying? Starting Tuesday, Tim Hortons will close all in-store customer seating at most of its locations across the country, shifting its focus to takeouts, drive-through, and delivery services amid COVID. So what are they going to do for people that don't have a car? I guess they have to order it and then they deliver it to their. If they don't have a car, they deliver it to, I don't know. As Canada's leading restaurant brand, we have a responsibility not to only to serve our guests, but protect them during this uncertain time, Tim Hortons spokesperson said. She said restaurants will voluntarily close all dining room seating in most locations until further notice. This is being done to contribute to social distancing that has been called by the public health officials, he said. Well, if this is in Vancouver, you have nothing to worry about, actually, because nobody talks to each other. Everybody ignores each other. Very antisocial city. So there's a lot of antisocial cities out there where people completely go out of their way to avoid anyone around them. So I'm not sure why they would focus on doing that. Like in the city of Vancouver, even in parts of Toronto, you don't have to do this. You don't have to do this. Loonie weakens as central bank actions fail to stifle virus fears. So you guys know what happened yesterday. The Feds in the United States, the Feds brought rates down to 0%. And basically, the Feds are creating more and more stimulus to inject into the markets where, in the end, we pay for it. Everybody pays for it. I had somebody comment, oh, taxpayers don't pay for the Fed injections. Yes, they do. When your currency becomes more and more devalued, and then they start raising taxes, and they start putting in more and more austerity, and started cutting like SNAP payments and cutting this and cutting that. And yeah, they got to keep their budgets in line, and they have to, I think they'll never balance their books, but in all fairness, they need to show some sort of stiffness or some sort of direction when it comes to showing that they're paying down this debt or showing that they're spending the right money in the right areas, right? So yes, they are taking money away from the common man. They are taking our futures away, and the debt load just gets further kicked down the road, like kicking the can down the road. The debt load just gets I guess, redistributed, right? You're going to start to see generational mortgages now, where I take a mortgage, for example, and then my kids continue to pay, and then my grandkids continue to pay. Yeah. And until one of them get into a bad marriage and they lose everything, you know? So anyways, Toronto, routers. The Canadian dollar weakens against the U.S. counterpart on Monday. See, Canadian dollar's weakening only because the U.S. dollar is going strong. All currencies are kind of having a really tough time, right? So you're going to start to see like a 60-cent Australian dollar. You're going to see a 70-cent Canadian dollar. It's not going to look good, guys, in the next coming weeks. Monday measures taken to global central banks to cushion the economic impact of COVID outbreak failed to calm financial markets, with stocks and the price of oil tumbling. Stocks globally whirled, and the price of oil, one of Canada's major exports, continued to nosedive after a second emergency cut by the Federal Reserve in as many weeks, effectively to zero. And supportive measures from all corners failed to quell COVID fears. So whatever they do, $700 billion injection, it doesn't matter. They can do whatever they want. They're out of tools. They've already cut rates to a point where there's no more left to go but to negative. And we've been covering negative interest rates here on this channel. Huge. Why? Because negative interest rates, guys, is basically the dawning of the financial apocalypse. It never works, but it seems to work at first when things start to stimulate a bit, but then it starts to come back all down. All right, and TSX halted again, breaking. The TSX restarts trading after the third halt in 7 days. And people are just going to sell off. People are going to get what they can out of this and walk away, right? Trading on the TSX has been halted for the third time since last week. When trading resumed, Canada's main index was down 13%. Bank stocks, including Royal Bank of Canada and the Toronto Dominion Bank, were among the hardest hit. As of 10:05 a.m. Eastern, they were down 12% and 14% respectively. Air Canada, AC.to, had even deeper rout, down 17%. The midstream oil and gas firm Enbridge ENB down 15%. COVID fears and other emergency U.S. interest rate cut led to the TSX opening down more than 11%. I don't know when it's open 11%. I think it was in 81 or early 82 when it opened this low. To start what could be another volatile week for stocks. The U.S. Federal Reserve slashed its benchmark to zero and restarted quantitative easing, selling people's futures away, which caused future markets to plunge and trigger circuit breakers to halt trading. G7 leaders meeting today by conference call to discuss further coordinated efforts to deal with the pandemic. So we're seeing markets. This is in Canada. Most of these stories are from Canada. Kind of wanted to share what's going on here because we're going to be sitting real soon at a 70-cent dollar. We are close. We're at 71 cents, and we're just going down. Let's take a look. See, here it is. And we are going down. Let's look at the last 5 days. Look at the last month. Yep, things are going to get pretty hectic here in the Great White North, where everyone's calling it the Great White Short, where everyone's shorting Canadian banks, and things are spiraling out of control. Look at the last 6 months. It's just woo. Yep. So that's that, guys. Economic data and monetary policy kicks off the week with a bang. Canada's 50 biggest companies work. Okay, nobody cares about that. Economic data to take a backseat as market volatility continues to hit the majors. U.S. and Canadian dollar highly bullish as new buyers are waiting. It's a busy day ahead of the pound with economic data and the budget in focus. I think England's going to do okay. I think they're going to do okay, England, because they're not going to do miraculously okay. They still have a lot of laundered money. They did separate from the rest of the European Union, which was a disaster from the start. But they could start curving things. They could start really cleaning up house, if you want to put it that way, right? Because England hasn't been doing well all in all too, especially with a lot of whatchamacallits there. More food banks opening than Subway restaurants and McDonald's and Starbucks put together. So that is a big eye-opener if you're living in England or the United Kingdom. Ireland's facing the same thing, and so is Scotland. Let me know what you guys think. Canadian markets, emergency shutdown, emergency this, emergency that. COVID is going to start making its rounds. We got nothing. There's nothing we can do to stop this. We're just going to have to be strong to fight it. And just be prepared. Buying toilet paper is nice, but when you don't have food to eat, that's actually worse. Let me know what you guys think in the comments below. Thanks for watching.